Hi, in this video, you'll learn about the 7 income sources most rich people have. So let's begin. If you've been reading a lot about finances, you might have noticed something about the rich. They usually don't rely solely on one income source. Recent studies show that the average millionaire has about 7 different income sources. The wealthy don't just get lucky, they make smart moves. Instead of focusing on one way to make money, they spread their investments. So, in today's video, I'll break down each income source and give you steps and tips on how to use them for yourself. It is important to note that you don't have to work on all 7 of these at the same time. We recommend starting with one, getting really good at that one, and then using the income from that to help you begin the next, one at a time. Without further ado, let's get straight into it. Income source number 1, earned income. Most of us make money through earned income, which is the cash we get from our jobs. It's the pay we receive for the time and hard work we invest at work. This could be a regular salary, hourly wage, or even commissions. The good thing about earned income is its consistency. For many, it's a regular paycheck that covers daily expenses and helps save for the future. It's often the first way people earn before they think about other ways to make money. However, there are downsides. First, there's a limit on how much you can earn, set by factors like your job role, the industry, and the hours you work. Plus, depending solely on earned income is risky. If you lose your job, things can get tricky if you have no other source of income. But there are ways around this. To make the most of your earned income, it's crucial to grow professionally. This means upgrading your skills, building connections in your field, and actively looking for better career opportunities. This can mean additional training, getting certified in specific areas, aiming for higher positions, or even exploring higher-paying industries. Remember, while earned income might be where you start, it doesn't have to be where you end. Income source number 2, dividend income. Dividend income is what an investor earns from owning shares in a company. Think of it this way. If you own shares or stocks in a company, you're a part owner. And as a part owner, you're entitled to a slice of the company's earnings. This slice is paid out in the form of dividends. What makes it great is its passive nature. Once you own the shares, you don't need to actively manage them daily to earn these dividends. For instance, if you owned 100 shares in a company and each share made a dividend of $2, by the year's end, you'd have an extra $200 without doing much. Now, it's not as simple as just picking any stock. The goal is to choose the right dividend stock, and that's not always easy. There's always the risk. What if the company doesn't perform well or, even worse, goes bankrupt? In such cases, the value of your shares could drop, or, in the worst-case scenario, become completely worthless. Additionally, many dividend stocks offer modest yields, often around 2 to 3%. This means the returns aren't always high, especially when you compare them with other investment opportunities. As a young investor, you might find more growth potential in diversified index funds than dividend stocks. Always remember that investing comes with risks, so it's crucial to thoroughly understand where you're putting your money. And if you're unsure, don't hesitate to consult with a licensed financial expert. They can provide guidance tailored to your financial situation and goals. Income source number 3, rental income. A significant number of affluent individuals have amassed wealth through real estate. Owning properties, be it residential homes, apartments, or commercial spaces, allows them to earn through renting them out. This rental income acts as a consistent passive income stream, with payments typically arriving monthly. Such regular inflows can be channeled towards servicing the mortgage on the property or offsetting other related costs. A rental income doesn't just offer a regular cash inflow. It has other financial benefits as well. For one, as the cost of living rises over time, landlords can adjust the rent, thereby protecting against inflation. Furthermore, there are tax perks tied to rental properties. Expenses related to the rental, mortgage interest, property taxes, upkeep, and more can be used as deductions, potentially reducing the overall tax bill. However, as with any investment, property rentals come with challenges. There might be times when the property remains vacant, or one might land unreliable tenants, affecting the expected revenue. Besides financial considerations, being a landlord requires effort and dedication, from property upkeep to managing tenant relations. It's a commitment that not everyone is suited for. Income source number 4: royalties and selling rights. Royalties offer an excellent way for creators to earn passive income from their original products or ideas. If you come up with a unique product, process, or idea, you can license it, allowing others to use it in exchange for a fee. It's like renting out your intellectual property. Remember, original ideas and products are private property. Using them without permission isn't just unfair, it's illegal. A typical example of a royalties in action is seen in the world of book publishing. When authors write a book, they grant rights to a publisher to format, print, and sell it. In return, authors earn a percentage of the sales, called royalties. While writing a book might take an author a long time, the beauty of royalties is that they can continue to earn from it for years after the book's release. Creating products or securing patents can lead to substantial royalty income. If you're an innovative thinker with many ideas, a high-profile example of royalty earnings is President Trump. Analysis by Forbes revealed that a significant part of his earnings comes from royalties, especially from licensing his name for products and buildings. The entertainment industry also heavily revolves around royalties. Actors earn every time their old shows are aired, and musicians get paid whenever their tracks are played in movies or commercials. Interestingly, it's not just the super rich or famous who benefit from royalties. Many millionaires possess rights to patents or intellectual property. These assets become valuable when others are willing to pay to use them, adding a consistent stream of passive income. Income source number 5: interest payments. Just as credit card companies earn interest when you carry a balance or as you pay interest on your mortgage, you too can earn by allowing others to use your funds temporarily. The ways to earn interest are diverse, ranging from banks' money market accounts and government instruments like treasury bills to certificates of deposit. One of the most common and accessible ways to earn interest income is through banks. The bank pays you interest when you deposit money in a savings account. A significant advantage here is the safety aspect. Most banks are FDIC insured, which means you're covered even if the bank goes under or makes a bad investment decisions with your money. The federal government guarantees your principal amount up to a specific limit. The other way to earn interest is when selling a business. Instead of getting the full payment right away, you can let the buyer pay you back over time with added interest. This way, you get a part of the payment every month, plus some extra as interest. However, it's crucial to protect your interest based on the contractual agreement. You should have the right to reclaim the business if the buyer doesn't keep up with payments, and always get legal advice when setting this up. Income source number 6: capital gains from appreciated assets. Capital gains are the profits individuals amass when they sell assets such as stocks, bonds, real estate properties, and even unique collectibles like artwork. The key is selling these assets at a higher price than the original purchase value. This income particularly appeals to long-term investors, asset can significantly contribute to wealth accumulation over time. The actual gain is determined by the asset's selling price minus its initial cost. There's a tax incentive for those who keep their investments longer. If you retain an asset for over a year before selling it, it qualifies for long-term capital gains tax, which is usually more favorable than the ordinary income tax rate. Case in point, in 2022, an individual with an adjusted gross income solely from long-term capital gains could earn up to $54,625 without incurring any federal tax, provided they take the standard deduction. This limit goes up for married couples to over $100,000. This provision primarily benefits retirees who can liquidate assets without significant tax implications. Capital gains offer the benefit of being relatively passive. After making your initial investment, you don't need to constantly manage or intervene. You can simply watch your assets grow in value. However, getting started, which includes saving and deciding where to invest, can be demanding. While earning from capital gains is enticing, it's not without risks. Market volatility can quickly turn your profits into losses, a situation a beginner investor might find particularly challenging. Thus, it's crucial to understand these market uncertainties and ensure you don't solely depend on capital gains for regular income. To boost your capital gains, it's essential to have a consistent investment strategy. Regularly investing in a diversified portfolio comprising stocks, bonds, and other income-generating assets, and holding them for an extended period can position you for better long-term returns. Income source number 7. Business income. Business income is generated from the profits of a business. This type of income offers vast revenue opportunities and over time can significantly contribute to an individual's financial growth. A primary advantage of this income type is the autonomy it offers. As a business owner, you can dictate work schedule and executive decisions, directly influencing your earnings. Furthermore, businesses come with potential tax advantages. For instance, several business-related expenses can be claimed as deductions, potentially lowering one's tax obligations. To boost your business income, investing in businesses with a strong potential for growth and profitability is crucial. However, it's essential to understand that owning a business can also come with risks, such as market fluctuations, competition, and operational costs. Moreover, running a business requires time, effort, and investment that may not suit everyone. Thank you for watching. Please like and subscribe. Remember, financial freedom starts with an adaptable mindset. See you in the next video. Cheers!